Good morning, my neighbors. Yes, and right back at you. I'm still here. I'm still here. So for the few haters that I do have, unfortunately, you're going to have to deal with me for a little bit longer. A little bit longer. We dodged a bullet. Didn't marry any, Miss Arizona over here. We dodged it very fucking close. This was headed directly to me Wednesday, and it suddenly took that tiny little turn to the south. But those boys over there, they are not happy. They are not happy right now. So as we go on and we continue with today being Friday of all days, the final Friday of September, the final Friday of the third quarter, you got 3 red closes in a row. What does it mean? What does it mean? Doesn't mean anything. It means you got 3 red closes in a row. However, with these 10 green closes, 8 red closes for the month of September, yesterday, the big minus 1%, finally getting that on the books. So we can move this off, put that back into white because that is no longer what we need. The algorithm strongly suggests that we should be looking for a plus 1% day. That does not mean that we are going plus 1% above yesterday's close of 66.0472, which $4 credit, $1 risk, 400% return, on top of the 233% there on Wednesday, on top of the 233% there on Tuesday, where you have your ba-bang, you want your riskier risk, 66.85, 66.80s. Over there on Wednesday, you want your riskier risk, right over there, 66.60, 66.55. And yesterday, 4 hours before the market opened, if you want $4.50 credit risk, then you want 66.10, 66.05. All you got to do, put in the order, leave it alone. So what you got is going back to the beginning of the month. Beginning of the month, we started out with a minus 1% day. 63.60, we got 63.95 was where minus 1% was. Now, the next day, we were supposed to get 64.79.70. We never did. We only got 64.53.67, which was plus 1% from the lows. Plus 1% from 65.69 takes you to 66.34.91. So be careful banking on this algorithm working out now that you have tariffs coming on every single bit of medication that's not manufactured in the United States. You've got tariffs coming on your cabinets that are not manufactured in the United States. They're bringing housing prices down, but it's going to cost you more money to actually put fixtures in it. And you've got Hong Kong tech sector down 3%. 3% on the day. I'm going to look over real quick on my other screen over here on the right. And you've got the Nikkei down 0.67% on the day. So be careful about being blindly bullish, looking for that upside, as I've already provided you a couple of different trades that you could look at for today, other than having already the trade of the week, looking for a red week, as well as having rolled over the trade from Monday into today, the 66.75, 66.70s rolled to September 26. So, where are we? Well, QQQ. Oh, minus 1%. Closed above where it opened. Be very well aware of that. Over on the SPX, what did we do? What did we do? What did we do? We did not. We closed almost where we opened. And over on the IWM, which I'll go over that in a couple of minutes, 244, 245, 245, 244, 247, 244, boom, 240s are gone. Just like that. Just like that. Just like, where was it? Is it here? Nope, it's not here. It's here. Nope, it's here. Nope, it's here. There it is. Sending out the October 31 IWM 240 puts, 390, $4 average. Like I said, weekly candle 242.24. Mentioned to you earlier in the week how it only stays up in the 240s for like 2 weeks maximum, and then bye-bye, see you later. You almost had 100% on them yesterday. You still got a month, but you almost got 100% on those yesterday. So let me get done with this, move on to the charts, as futures are teetling on going red over on the ES, fractionally red over on the Russell 2000. Definitely feeling that pain from that tech sector sell-off over in Hong Kong, over here on the NQ, as Alibaba's already down $5, $6, $7 already, and the money is actually contemplating on shifting over into the Dow at the moment. But the Dow's getting a little bit overbought, so it is what it is. Dow being up about 77.0.17. So, take you on to the charts quickly, since I haven't been able to sing and dance and do all of that jolly stuff during the course of the week because of all the other things, snake bites, typhoons. 66.99.52 on Monday, and where did we go? Boom, and almost touching that 20-day moving average yesterday. Almost coming down to the FOMC lows yesterday. Now, I'm blind. You know, I had perfect vision years ago, 3-4 years ago. Now I got to wear glasses to read shit, check prices. I'm blind and I can see this being perfect. 1, 2, 3, 4, 5. But I can see it clear as day. 1, 2, 3, 4, 5. 3 coming just below the 161.8 extension. 5 coming almost perfectly to the 200 extension. And the retracement thus far, the retracement going there right to that 23.6, right there, boom, 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 just above it, 65.99.97. So theoretically, we should be looking to see 66.18, 66.18.99, and I take you backwards to again bring you back to that period. If you remember the time when you were not gay, if you remember the time when you actually did shit and didn't think about it because you didn't have all these inhibitions about, oh my God, what about this, what about that? We were playing the 66.12, 66.16 Fibonacci's perfectly during the course of a week ago, OPEX week, September 19th week. Ba-boom, 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 excellent, ba-boom, FOMC meeting, excellent, ba-boom, ba-bam, and then you had your gap up after the FOMC meeting and the run up into what we talked about with, okay, yeah, fine, we're going to get our wave 5. Let's get the wave 5 of the wave 5 out of the way. Well, here you are. So, again, 1, 2, 3, 4, 5, see it very clearly. As for the damage report, I've got for you here in purple, you can put whatever color you want, whatever color you choose, whether it be masculine, feminine, transgenderish, whatever you want, for the 20-day moving average is what I have here. And as you can see, the 20-day moving average, come over here back in end of July, into August, into the stock market crash of the summer. Ba-boom, broke the 200-day moving average by gapping below it, and then recovered it, and held it, and held it. And then we had the next crash right there in August 20. Oh my God, right to the 20-day moving average, through it and back up above it. And then the same thing happened right there at the end of August where we had the next big stock market crash through the 20-day moving average and back up above it. So your 20-day moving average is right there, right above that 65.51, 65.32, where the bulls need to start worrying, and it's going to take a considerable amount of days before that starts going, oh, that's not the right drawing, you fucking muppet. It's going to go here, and then it's going to go here, the 20-day moving average. So that's going to take time, and the bulls can use that in order to recover, to throw on the one alternative of alternatives chances that we actually have one more wave, one tiny more wave to go up into the beginning of October as we go into earnings season. We still have one more wave to the upside. Over on SPY, Again, the damage report is not there. There's no damage. The damage starts taking place, again, once you start breaking below that 639. Over on the SPX, looking at your warnings, 639, that would take you right over there, right to your 6420 or 6385. That's when you start getting damage where you see here bears start winning, 6445, 6420. As we come over onto the QQQ, and the destruction of that minus 1% day had occurred yesterday, 593, bull's first warning. Now, granted, you made 500% on Tuesday on the 0 DTE 600 puts. You made better than 400% on the September 26 600 puts if you took them on Monday. But the bulls don't need to worry still, because we're still up above 583. We're still up above 578. Nothing to be worried about for now, regardless of the Ponzi schemes that are taking place within all of the AI bubble bullshit. 602.87, and just below that 590 area yesterday to give it a whoosh, quick one, but well off the FOMC lows down here at 584. Well off of them, with the 20-day moving average being right there. DIA, nothing whatsoever to update for you on DIA. Nothing at all. One of the driving Miss Daisy fucking chilled, relaxed, just movements as far as it goes. And here you have your IWM after going 43.93% off of the April lows, which again, for those that are statisticians, I push you back to Ryan Dietrich. Go do all the research that you wish to do. Nice big gap to be filled still over from the Wednesday close over there at 242, but having touched and embarked on the 230s, tiptoe, be careful of that 236, 236.21, if I recall it to be exactly something like that. Yeah, I think it's right there. That 236, be careful. So anyway, again, that's where we've got on that. I'm going to bring you back to leave you off with the Oracle 290 puts. And as you may recall, I was looking at the Oracle here as we were doing the live stream ahead of the FOMC and said, this is too easy. November, December 300 puts. It's too easy. And bam, we slammed down to 292. Now, when we made the move back up here to 320 is when I sent out that alert. Let's go, ba-boom. And as we came down here, over here on, when is this? September 18th. We're already up.
Nothing can stop me. I'm all the way up. All the way up.
Already up. So right there, we get the bounce and the Oracle pump and the TikTok and fuck you TikTok and, Truth Social, massive posts by the HNIC over on Truth Social, where they don't even have 10 million fucking followers. There's people on TikTok with fucking 10 million followers. The HNIC doesn't have 10 million followers on his own fucking social media site. And here you go. Here goes Oracle down into 285. 273 being the primary number one target, 265 the secondary target, 259 where your 50-day moving average is, and you still don't fill the gap down to 241. So Danny, as a going away gift, since you will never ever be back with me, I hope you bank on Oracle. Over on Google, nice. 256, warning about that 260. Again, that thing just blew up. Totally blew up with Google. And here you do, boop, come down, perfectly fill the gap. Come back up here with a big spike up to fill the gap, which created the gap. And now here you have your Google rolling off because of the tech sector. So on Google, we got to see that below that 238. 238, we start looking at 231 for obvious reasons, because that's your September lows, well, your September 5 at least. Minus 10% from the all-time high being at 230, and then you get the big gap. The gap that made me look like I'm a fucking idiot and I don't know what the fuck I'm doing. The big gap that came there back on September the 2nd, right over there at 224 and 211. because I don't know what I'm doing. Coreweave, almost up into that area. Which, before I go to Coreweave, let's get back over there. And Coreweave, Google, 260 top watch. Again, August 25 to 1150 was where my top watch was. I didn't know they were going to gap it up on some fucking bullshit news. I had no fucking idea. So here you go, 212, 215 calls. That was the trade on that. You only got 21% on the September 19th. They only got 30%. November 21 still has a big chance, but it's going to take a big move. And there was your chart for your update and, why, all of that, blah, blah, boo, blue. Coreweave, the 110 puts for December 19th. Watch it. Here we go. If you want to get perfect, you can wait, get on this, get on that, 144, 149. Come on, Eileen. Come on. Come, baby, come. Blah, blah, blah. But minus 125, the bears start gaining a little bit of control. And here you are on Coreweave, just coming to your 125, 123.59 will do some damage. And then you really start screwing in the screws, putting some pain in when you start breaking there below 120. And finally, I leave you here with Robinhood. And I know there was a lot of resistance about the Robinhood idea and the Robinhood trade because a lot of people use Robinhood, and you wouldn't want to put, well, I'm not even going to say the fucking words. Forget about it. Like always, if you have never traded Hood, watch it, blah, blah, blah. I took the December 19th 120 and the 100 puts. And the reason I took them both is because as this gets down to 100, I will be taking the 120s off, which will already be making me close to 100% and financing these 100 puts. So these 100 puts will be 100% free. A break below 113 will start confirming the gap fill. 113 is well off, but right down here with your gap to be filled right over here, going back to September 17th. And here you go is where you start to lose it, right there at 113, 114. So you got a little ways to go. You still got 7 points to the downside to get. But I'm going to get my gap filled. Just like when I went to prison, I was, shacked up with Martin Shkreli. So enjoy your Friday, enjoy your weekend. I am not here on Monday. Like I told you, I will be held hostage, but I hope and pray I have an opportunity to put together the video that I want to put together of the 884 strategy. And if I can get it done on the weekend, I'll put it out on Sunday. I'll get you some kind of email out on Sunday, but I'll see you again on Tuesday. Enjoy your weekend. And hey, could have been a lot fucking worse over here.
Crossing.